So this weekend we finished testing the alternative SR CounterTrend II strategy to have all the same parameters on the same markets, on all markets. So I'm going to show you the inputs for that, and they're very simplified. You will get the update here soon if you have this strategy. But here are the inputs for all the markets, and let's see, they don't all fit on the screen. Let me scoot it over a little bit, but you can see the number of contracts, max daily entries, limit entries. All these inputs are the same, and you see that we've removed displace. Displace was not attached to any rules; it was just a dummy variable, and it's been removed as well from the original. We don't have any time-based entry points. So if you take a look here, I can narrow it down like this, and you don't have. We removed some of the parameters, so we have percent range long and percent range short, and that was just one variable for longs and shorts, but we find that we're able to balance the trades if we have a different number for the short side than the long side. Originally we were going to do this with the length and number of deviations, but we went back to our original 20 and 2, all the same, precision and X, 1 point on all. So all these inputs are the same for all markets, all 9 markets that we have for this. And we've removed the time-based inputs because we calculate it based on the session. If you use the US stock session, it looks at the last bar of the day and says, okay, we're going to stop trading and exit at the last bar of the day minus the bar interval. And so it's all automated, so you don't have to deal with different exit times for different sessions, and it automatically knows to get out on the last bar, which is we trade this on 1, 5, and 15-minute bars, so you get 3 variations of this by trading it on the 1-minute bar, 5-minute bar, 15-minute bar, and for all markets. And then we also, for the $1 million portfolio, we trade the original SR CounterTrend II setup. So we trade one contract for each of these markets on SR CounterTrend II, and then we trade one contract for each interval for these settings on SR CounterTrend II version 2. And that gives you 4 contracts for each market on SR CounterTrend 2. And so to make this more clear, I'm going to show this to you in MultiCharts, and then we'll go over the $1 million portfolio. So I'm showing you this in MultiCharts because MultiCharts does a little better job on memory management than TradeStation, and I can load more windows going back further in MultiCharts than I can in TradeStation. But it is TradeStation data, and the code is the same, and you can trade this on TradeStation, NinjaTrader, or MultiCharts. It's just MultiCharts is the most efficient way to test this on a lot of windows for a lot of time and in a portfolio environment. So SR CounterTrend 2, we have that on 1-minute charts. All the same markets, all the same parameters. Then all we do is trade it on 5-minute charts, and then all we do is trade it on 15-minute charts. And so you get 3 different workspaces with 9 windows on that. Same strategy, all the same parameters for all those markets. All you're changing is the interval. And then you trade the original SR CounterTrend 2, which is all the same 9 markets with a slight variation in parameters. And so that is 9 different markets trading 4 contracts on each with slight variations. The first 3 are just based on time interval, while the last variation is just based on some parameter differences, but most parameters are still the same. And so that's 36 different variations. And then to complete the $1 million portfolio, we bring in, and this is in TradeStation, we bring in our 100K portfolio. The 100K portfolio already includes SR CounterTrend 2 silver and SR CounterTrend 2 crude oil. So we don't include those again. We just include the other 8 strategies. And so 44 different total windows. And so I'll have this more clearly laid out on the $1 million portfolio page. But to take a look at the results, we pull in the portfolio trader for all 44 algorithms, and you see that you see the total net profit, the long and short trades. And when we include the 100K portfolio strategy, some of those are long only. SR CounterTrend 2 trades a balance of long and shorts. The average trade profits are pretty balanced, but some of the other 100K strategies are long only, like Gold Flash and some of the others. So here's the equity curve with the drawdown. And so what is the max drawdown? 27.548.10 on a closed trade basis, 25.550. And the drawdown for this is about, I mean, the margin for all these markets, if traded at all the same time based on day trade margin, is about 65,000. So you could actually trade this $1 million portfolio with 100K. It'd be very aggressive. Margins could go up at some point if volatility picks up. You are not allowing for anything worse than the worst case drawdown if you do that, and margins pick up. Also, not all these strategies are going to trade at the same time. It's very low frequency, so there's no way to know in the future if all strategies would take a net position or not, and if you'd ever need full margin. But if you did, it would be about 65,000 based on the current margin requirements. Here's a total trade analysis. Around $70 average trade profit before. Actually, that's after slippage and commission. We are using $25 round turn slippage and commission, so almost $100 average trade profit. Really good for day trade. It's hard to beat $100 on day trade average trade profit for something that trades. I mean, these are low frequency strategies, so you'd have to decrease the strategies even further to really boost this average trade profit and become what I would consider too selective. And so here is the annual period analysis. It'd be 50,000 this year. It's about $100 average trade profit this year so far, 562 trades. And so 2017 was less than average year with the low volatility, but we're about a third of the way through the year. So if we go at this pace, there's another 100,000 left if we continue to pace at this rate. I'm not saying that future performance will be equal to past performance, but a third of the way through the year and at 50K, so another 100K. So that could be a good 8 months. Let's look at the monthly analysis. April is actually the worst month besides December. So April and December, if you're going to take a couple months off, based on this, these are the net profits, and I would say take April and especially December off if you're going to trade this. But if you're not trading this and you want to trade it, now's the time to start thinking about getting into this. This is new, and so is the new $1 million portfolio. We've really just in the past only said, okay, the $1 million portfolio is 5 units of the 100K, but we're really expanding this out and taking advantage of a greater capitalization base and trading more markets. And so this is what you can do with the $1 million portfolio and only partially fund your account with 100K, knowing that you may need to add additional funds if margins go up or if drawdown goes beyond the worst case drawdown. So ideally you would want to at least put in $250 to trade this $1 million portfolio. So that is the update for the latest $1 million portfolio and SR CounterTrend II V2.